morning, everyone. Thank you for taking the time out to be here. I wouldn't say very early in the morning, given that it's close to about 10 a.m. in the morning, but thank you so much for being here. I think after yesterday's sessions, and the last evening that all of us had, it was filled with a lot of optimism, a sector that has finally met its opportunity. 2024 was a great year for each of us sitting in this room. Performances were at an all-time high. In fact, I think the average rate that we recorded in 2024 in India was the highest ever that we had witnessed. And all of it came up in a sudden haste. The hospitality sector, all the growth that we witnessed came off on a very small base of hotel rooms that we have in the country today, especially when you compare it with the likes of Shanghai and Dubai. And just to share with you, I think India has about 170,000 keys within the branded hotel space in all of the country today. And when I compare it to markets like Dubai and Shanghai, we in fact fall short. So Dubai has about 160,000 keys, Shanghai more than India. And so there clearly a sense of opportunity that remains for all of us to capitalize on this growing sector. But within it lie multiple opportunities that often get missed. And we wanted to take this platform to share with you one such opportunity that we believe there lies huge potential. And that, for everyone's benefit, is the opportunity in the economy hotel segment. A lot of us miss out on the economy segment, given that a lot of the growth and the brand value stems from our luxury to upscale hotel brands, which is all what we see and consume on a daily basis as we speak today. But there lies an opportunity of, by any good estimate, of $10 billion in capex value that can be implemented all in a day's time. And there is demand that exists today. In yesterday's sessions, all the panelists, keynote speakers that we had on stage very explicitly mentioned, for the benefit of all in the audience, the inflection point of India's economy. And we all agree in this room that it's never been better. Over the next 5 years, our GDP is likely to double. We are likely to become the third largest economy in the world, moving from the 5th place that we are, only behind US and China, and thereafter it's a long way to go. And a lot of this growth is stemming from the large middle income group that India has the benefit of. That is our gold mine. 65% of the 1.4 billion people that we have in the country today lie in the middle income household. And for everyone's benefit, that's about 900 million people that we have the opportunity to target. And they all are becoming, as the economies double up, becoming highly aspirational and are wanting to consume products at a rapid pace, products that are of very high quality. And the consumption rate has been so strong that over the last 5 years, we have witnessed numbers like never before. Our digital payment transactions have grown 7 times nearly. Our credit card have doubled, and so has our residential sales. And all of these parameters suggest only one thing, that people want to consume, and they want to consume at a rapid pace. But the reality is such that India today has one of the lowest GDP per capita. Um, it, we rank 20th amongst all the G20 countries that we were proudly hosting in 2023. And actually, this one statistic, along with our existing GDP ranking from fifth to third, and the total GDP in number, I think these are two statistics that stand out for me. On one end, you have the lowest per capita, and on the other end, you are the third largest GDP. You have the third largest GDP in the world. And so, that really suggests to me that there is a lot of opportunity in the bottom rung of our population, which is looking to consume. If all of that wasn't convincing enough, let me drill down a little bit on how the supply, the hotel supply in the country stacks up. And I'll compare it to our two closest peers, the US and China, which tell a very different story. Nearly 60% of India's hotel supply lies in the luxury and the upscale space, which is very different from our friends, US and China, where the pyramid is inverted and rightly stacked as well, where nearly 60% in the case of US lies in the economy space, and in China it's even more. A few numbers really. The 43% that lies in the mid-scale and the economy space amount to about 70,000 keys, whereas in markets like US and China, that exceeds a million. This statistic becomes even more grave when I break up the mid-scale and the economy segment, where bulk of our hotels actually lie in the mid-scale space, and very, very little in the economy segment, amounting to only 7%. And in absolute numbers, that is nearly 12,000 keys. Again, contrasting that to what US and China offer, 700,000 to about 900,000 keys in each market. And that, again, further reiterates the opportunity that lies within the economy space for growth and development. The one key moment that all of us can take pride in when you compare it with what's really happened historically, GDP per capita in markets like US and China witnessed their inflection point when they reached the $3,000 mark. We are very close. For everyone's benefit, I have assumed already that at $2,700 we are where China and US were. US was $3,000 in 1960, whereas China around the 2008 mark. Yeah. And the factors that drove growth during all these inflection periods for US and China are the same factors that are driving growth today in India as well, be it urbanization, be it infrastructure-led growth, be it economic policies of the government, and lastly, but not the least really, tech advancements that all of us are benefiting today of and highly being spoken of as well. One trend that was visible across markets in US and in China during their inflection points was the growth in travel. These markets witnessed the highest growth. In fact, leisure travel was the first time coined in the US in 1960s, whereas China actually witnessed its largest growth in tourism as per WTTC in that period. And that time was also the time when economy hotel chains in these markets witnessed the largest growth as well. Motel 6 that all of us have grown up with knowing was launched in 1960. And in 1970s is when the US witnessed huge growth in economy brands, so much so that today there are about 50 hotel companies that, that boast, and actually proudly call themselves as economy hotel brands. A similar trend was visible even in China, where new brands opened up. I think that the biggest brand in China today is called the Home Inn, which boasts of nearly 250,000 keys, which for everyone's benefit over here is larger than the total branded hotel supply in India as we speak. One other trend that we felt was visible from a demand perspective, very evidently putting the story out for everyone's benefit, was the gross booking value of bookings that were recorded in 2023. Right? And this was a report that was published by Deloitte, which actually split the total booking volume between independent hotels and branded hotels as almost being equal. But the one defining factor was that 34% of all the $7.5 billion of booking volume actually in the independent space stemmed from the economy hotels. And that really gives you the size of the opportunity and the scale that is in front of all of us today. And if we were to simply convert that into branded hotels, that is where the $10 billion capex really stacks up. To say that today, if all of us convert this $7.5 billion into gross room nights and to hotels under each of your brands, we could generate nearly 2,500 hotels. Okay. All of this is going to become even more evident as our economy doubles up from $2,700 today to $4,000 over the next few years. Our tourism numbers, domestic tourism, which is all that we benefit hugely from today, is likely to double, and so is their spending, which means there's going to be a lot more need of hotel rooms that I can't even today fathom as we speak. And so I wanted to leave this food for thought for all of you, that there is a huge opportunity, untapped opportunity that lies in the economy hotel space, and all of you should give it some thought over the next few months to see how you can further invigorate the growth in this sector. Thank you very much.